DCA isn't a price strategy, it's a discipline. Most retail investors think DCA gets you a better price than lump summing. It doesn't, on average. What DCA actually does is remove the buying decision entirely. You set it once, the platform executes, and you stop checking the price. That alone is what makes DCA work for the people it works for. Not the maths, the discipline of not having to decide. 3 things in this video. What DCA actually does. 3 setup paths in 30 minutes. And the 3 market scenarios where DCA performs differently. DCA, dollar cost averaging, means buying a fixed amount of Bitcoin at a fixed interval, regardless of price. $40 every Friday, $200 every month. The schedule matters more than the size. What DCA actually does, in order of importance. First, it removes timing decisions. You don't decide when to buy. The platform decides for you. Second, it smooths cost basis across volatility. Bitcoin up 1 month, down the next. Your average cost lands at the period's average. Third, and most underrated, DCA builds the habit before it builds the position. The first 6 months teach the routine. The next 10 years build the wealth. Clip break. Here's the catch most retail investors miss. Lump summing is statistically right about half the time, and on a long horizon usually wins on expected return. So why DCA at all? Because the investor who lump sums at a peak watches a 50% drawdown and sells the bottom. That investor would have done better DCAing the same money over 12 months. Not because DCA captured a better price, because DCA never gave them the chance to make a buying mistake. DCA doesn't beat lump sum on average, it beats panic on average. 3 paths to set up DCA. Pick one, do it once, never think about it again. Path 1, outside the US, OKX has a recurring buy strategy in their trading bot section. Spot fees around 0.10%. By far the cheapest of the 3 options. 10-minute setup. Pick the asset, the amount, the frequency, and confirm. The bot executes from your trading account balance. Path 2, inside the US Coinbase Auto-Invest in the main consumer app. Tap buy, switch from one-time purchase to recurring buy, choose frequency. Around 1.5% fee per recurring purchase when funded from your currency balance. Higher if you fund from a debit card. Clip break. Path 3, brokerage. Buy a spot Bitcoin ETF inside your existing broker account on Auto-Invest. The largest spot Bitcoin ETF, IBIT from BlackRock, charges 0.25% annually as expense ratio. Most U.S. brokers, Fidelity, Robinhood, Schwab, offer commission-free ETF buys. The annual expense ratio is the only ongoing cost, and the ETF lives inside the existing tax-advantaged wrapper of your IRA or ISA if you have one. The platform you choose decides your fees. Pick the path that matches your geography. Then pick once, set, forget. 3 Bitcoin scenarios. DCA performs differently in each. Scenario 1, steadily rising market. Bitcoin trends up over 12 months with shallow drawdowns. Lump sum wins on expected return. Your money compounds longer. DCA underperforms slightly on price, but you traded that small gap for 0 timing risk. Scenario 2, volatile sideways. Bitcoin oscillates within a wide range, ending where it started. DCA accumulates materially more Bitcoin per dollar than the equivalent lump sum at the period midpoint, because each cheaper monthly buy purchases more Bitcoin. This is DCA's mathematical sweet spot. Clip break. Scenario 3, drawdown and recovery. Bitcoin opens the period high, drops 50%, then recovers. Lump summing at the start means watching the drawdown with the full position already exposed. DCA-ing the same period spreads exposure across the drawdown, lowering average cost and lowering psychological exposure simultaneously. The lump sum investor here is the one most likely to sell the bottom. The DCA investor is still buying. DCA isn't insurance against price. It's calibration to behavior. The investor who needs DCA most is usually the one who doesn't yet know they need it. 3 things. DCA removes the buying decision. The platform you choose decides your fees. The right scenario for DCA isn't a market. It's the investor most likely to make a mistake without it. Full Bitcoin investing framework for 2026 on the Channel Hub video, link in the description below. Subscribe so you don't miss what comes next. DCA isn't a price strategy, it's a discipline.